What's up, everybody? As we get through this spring market, it seems like prices are going up again as inventory is still very scarce, at least where I am here in the DC area. Whether I'm in Montgomery County, Maryland, DC, or Northern Virginia, there is a house that shows well and is priced right. It's selling very fast in multiple offers over asking. But then I look west and the data shows that prices are falling as inventory is increasing. Is our country so split that prices are falling in the west but rising in the east? So today we're going to take a look at what's happening west of Texas versus the Northeast and Midwest. And stay tuned until the end because I had clients come into town from California last week, and what happened with their house in real time absolutely blew my mind. I'm gonna tell you all about it. So let's just dive right in. In a recent report from Black Knight, home prices fell in 12 of the largest metro areas west of Texas last month, including 10.5% in San Jose, California, 10.3% in San Francisco, and 7.5% in Seattle. Prices in 40 major cities west of Colorado, meanwhile, rose during the same month, including 12% in Miami and 9.3% in Orlando, Florida, and 8.3% in Buffalo, New York. Take a look at this chart provided by Black Knight for the Wall Street Journal. This pattern of geographical disparity is highly unusual, if not unprecedented. We've never seen anything quite like this where it's so stark west to east, said Andy Walden, Vice President of Enterprise Research Strategy of Black Knight. Ever since the Fed Reserve stepped in to combat inflation by raising interest rates, the housing market started to correct. We all know that mortgage rates are double what they were a year ago, and new inventory is way down. I say new inventory because if you simply look at the numbers, they will tell you that inventory is way up all across our country, which can be misleading. According to Realtor.com, on a year-over-year basis, inventory, meaning active listings, is up 58.9%. But if you look closer, this is mainly because houses are just simply taking longer to sell, especially if they're overpriced, need a lot of work, or just simply don't show well. New listings of homes for sale actually fell 21.7% year over year. They declined in all 50 of the most populous US metros. In fact, inventory levels in March of 2023 were 49.5% below March 2019 levels. Would-be sellers simply don't want to put their houses on the market unless they absolutely have to. I mean, most homeowners with a mortgage have a current rate of below 4%, and they simply don't want to trade in that low rate for a higher rate if they bought a different house. So why the big split between East and West? And will low new inventory cause the housing correction to lose its steam? In a Wall Street Journal article titled "A Tale of Two Housing Markets, Prices Fall in the West While the East Booms," Black Knight's Vice President of Research Strategy, Andy Walden, speaks to Nicole Friedman about the divided country when it comes to the housing market. According to Walden, the Western markets that are seeing significant price declines fall into several categories. You have the housing markets in the West that have had a long run in rising home prices since the 1990s, when the technology industry boom caused the housing market boom. Prices went even crazier in the 2010s when the tech boom generated high-paying jobs and enormous wealth. San Francisco home prices rose 112% between January of 2012 and January of 2020, outpacing a national 58% gain in that period, according to S&P Dow Jones indices. Now, those cities most closely associated with tech have home prices falling the fastest. Those markets are contending with an economic slowdown, a wave of layoffs, and pre-existing affordability challenges because they already have sky-high home prices. Add to that the failure of Silicon Valley Bank and the others, even if these banks are being bought out, and home prices are falling. San Jose, California and San Francisco home prices are down more than 10% from a year ago in January, and Seattle prices fell 7.5%. Don't let me forget to tell you the story about my California clients. And then there are those markets where home prices skyrocketed in recent years as people started to work from home and were able to move to other states such as Austin, Boise, and Phoenix, where they could afford to buy more than the local incomes could support. And as we know, these bubbly markets have experienced severe price declines as soon as the market started correcting. The higher interest rates put a stop to remote workers moving in, and the local incomes could not support the inflated home prices. And finally, Black Knight's Walden said, you have those housing markets where prices didn't surge as dramatically during the boom, but they were already prohibitively expensive, such as Los Angeles. In Los Angeles, about 63% of the area's median household income would be needed to make mortgage payments on the average priced house in January, according to Black Knight. Meanwhile, the largest price increases in the eastern half of the United States occurred in Florida, which has welcomed a steady stream of home buyers and relocation companies in the past few years, including a slew of financial companies that moved to Miami in 2021 and 2022. Prices surged by 12% in the Miami housing markets and by 9.3% in Orlando, according to Black Knight's data. Buffalo, New York is also a winner, with prices ticking about 8.3% higher. So with all this discrepancy between the different housing markets, where do the experts see home prices going for the rest of the year? And is the housing market correction losing its steam? Right now in April, the housing market is at a pivotal moment. This is traditionally the busiest time of the year for housing markets across our country. To better understand where national home prices may go next, Lance Lambert of Fortune rounded up the revised forecasts from 7 major research firms. So let's go through them real quick. CoreLogic, the real estate research firm, expects U.S. home prices, as measured by the CoreLogic HPI, to rise 3% between January of 2023 and January of 2024. If CoreLogic is right, then U.S. home prices would end 2023 back at price levels achieved at the peak of the housing boom back in June of 2022. Zillow, economists at the home listing site forecast, as measured by the Zillow Home Value Index, will rise 1% between February of 2023 and February of 2024. The Mortgage Bankers Association, the trade group's latest forecast, has U.S. home prices, as measured by the FHFA U.S. Home Price Index, falling 0.6% in 2023 and then another 1.4% dip in 2024. It then expects national home prices to rise 2.1% in 2025. Goldman Sachs, the investment bank, expects U.S. home prices, as measured by Case-Shiller, to fall 2.6% in 2023. That take us, Goldman Sachs says, to a 6% peak to trough decline. On a regional basis, we project larger declines across the Pacific Coast and Southwest regions, which have seen the largest increases in inventory on average, and more modest declines across the Mid-Atlantic and Midwest, which have maintained greater affordability over the past couple years. Right, Goldman Sachs researchers. So they too are taking into account the differences between the West, Southwest, and the Mid-Atlantic, Midwest. Fannie Mae. Economists at the firm predict that U.S. home prices, as measured by the Fannie Mae HPI, will fall 4.2% in 2023 and another 2.3% dip in 2024. Fannie Mae is currently modeling an average 30-year fixed mortgage rate of 6.5% for 2023 and 5.9% in 2024. Moody's Analytics. The firm expects U.S. home prices, as measured by the Moody's Analytics Repeat Sales House Price Index, to fall 4.2% between the fourth quarter of 2022 and the fourth quarter of 2023. In total, Moody's expects a peak to trough home price decline of 10%. KPMG, the Big Four accounting firm, expects U.S. home prices, as measured by Case-Shiller, to fall 8% in 2023. If KPMG's latest forecast is correct, the U.S. housing market in 2023 would soon experience its sharpest home price decline since 2008. A year that saw national home prices plummet 11.9%. So even on a national level, the industry experts have a wide range of forecasts, from up 3% to down 10%. And here's the thing. Remember I told you that I had clients from California come into town last week? Well, here's what happened. They put their house on the market 2 weeks ago in the Bay Area in California, and they got 9 offers, and the house ended up selling $700,000 over the asking price. And it wasn't just the one buyer that went there. In the end, there were 2 of them that went that high. $700,000 over asking. All cash, 1 week close, no contingencies. So this is still happening in the Bay Area. I was shocked. Like you guys, I read all the news about how bad it is out in California and the severe price declines. So when they told me they actually had to sell their house in California before buying here in DC, I was pretty nervous for them. But I guess I was wrong, which just goes to show you, like I always say, real estate is very localized. So if you are thinking about buying or selling, definitely talk to your local expert and find out what's happening right around your house and what you should do to get the most money for it. At the end of the day, the best source of news about the housing market across our country is you guys. So definitely comment below, tell us where you live, tell us what you're seeing, because I would really like to know, and I think a lot of us want to know the real deal in real time about what's happening in our housing market. If you missed my last video on Goldman Sachs, definitely check it out, because they are very confident that home prices will continue to decline. Thanks for watching. I do appreciate it. Bye.